What's up, guys, and thanks for tuning into the Crypto Stackers live stream. Let me get my camera situated a little bit. It's been a week. Since I streamed. We'll get started here in just a second. Maybe I just need to scoot my chair over a little bit. Good morning, everyone. We are going to be okay. That's what we're saying in the bear market now. Wag me, we are going to make it, is for bull markets, and it looks like wag bo, we are going to be okay, is for bear markets. And we have broken $34,500. This has been my level that I have been personally watching, to indicate whether or not the bears or the bulls are in control and whether or not we are in a bear market. Now, a lot of people are like, oh, we've been in a bear market, but that's kind of semantics, right? That's just how you label it. Like, if you identify that you're in a bear market down here at $34,000, right, and you sell $34,000 and we bounce up to 48 and you could have sold for 48, just because you called it a bear market down here doesn't mean that you've made the right decisions, right? So what we need to understand is whether or not the market participants and the market as a whole believes we can go back up to make new all-time highs. And right now, the market does not believe that all-time highs for Bitcoin are on the table anytime soon. The reason I can say that so confidently is because we've fallen through $34,500. And what this means is it means people are willing to short on leverage and keep their liquidation points below the all-time high, exposed against the all-time high, meaning they don't think they're going to get liquidated by Bitcoin coming back up to $68,000, $69,000. Right? That's what the market's telling us by pushing the price below $34,500, saying all-time high is off the table. And a lot of people are probably thinking, well, all-time high has been off the table for a while. Well, not really. I mean, a couple of weeks ago, March 28th, everybody was thinking, oh, we're going back up to new all-time highs. We're just going to kind of pop back up into $60,000 territory. I know a lot of people were FOMOing here. And I was saying, this is not where we FOMO, right? This is where we sell some resistance, right? This is where we wait for a correction to start laddering in. Now, we did ladder in a little bit early, which is why our early ladders are always very, very small. I will go over those levels for Bitcoin in just a moment. But I know a lot of people are like, well, hey, the bear market has been in. The market hasn't just randomly decided in the last few days to, that all-time high is off the table. I don't think that an all-time high has been off the table until recently, until the last 2 to 3 days, right? Because if we go back in time, to our last previous high at $64,800, $65,000, we see that the bears really, really struggled to take it below 32.4, which was the 1x short level, right? And off of our previous, or our next local high, $60,000, they could barely take it at all below $30,000, which told us that the market believed that it could come back up and liquidate them if they did not protect their short liquidation points above this local high. And that's what happened, right? That's what happened. It came back up and liquidated all the shorts, and now we've kind of crashed back here, right? So will be very interesting to see how this holds up. Interestingly, this margin pressure level here is what is actually still relevant and holding today, despite the fact that we did go up a little bit higher. right? It's almost off of this guy right here. So 29.8, $30,000, still a very strong support level. Bidding at 29,600 or at $30,000 is completely fine level to bid. I did not bid very aggressively here because I don't see it as a recent margin pressure level. It's not a recent margin pressure level. What I mean by that, it's a little bit dated, right? It's structural support at this point. What I mean by structural support is a lot of people are bidding $30,000, and we've gotten this bounce here because $30,000 has held support previously. And it held support previously because it was a margin pressure level previously. But it's not a very recent margin pressure level right now. In fact, the margin pressure levels right now are off of this local high at $48,000, right? And you can see we actually spilled through the 3X and the 2X. We came back up and tested the 2X, and we've started to get a little bit of rejection. Now, I wouldn't be surprised to get crunched here. I wouldn't be surprised if we just get crunched between $29,000 and around $32,000. Maybe even come back up and retest 34.5, our big 1X level, right? And kind of get crunched and consolidate under $34.5 thousand, right? I'd be pretty surprised if we don't at least get a single attempt to push back up above $34,500. Bulls trying to take control of the market. And if we fail a retest at $34,500, that to me would be indicative of potentially a further sell-off, right? So I have skipped bidding heavily. I've bought some Solana in the 70s. Probably should have bought it at 65. I'm just really trying to, which was our support level that we talked about. Really just trying to be conservative here and stack as much as possible at this $24,000 level. And really, I'm not even stacking a ton at 24,000 for Bitcoin. I'm stacking more at the corresponding Ethereum levels because I want to gather as much Ethereum as possible, right? As much Ethereum as possible pre-merge. So I do want to go, if you guys stick around, I'll tell you the 4 steps to the bear market game plan, or at least my bear market game plan. All right, the 4 things that I am looking to accomplish this bear market. So we see $24,000. That is the level that I want to buy very aggressively at. And I do think that Bitcoin can get there, especially if we start to see the legacy market really, really tank, which it has been. Let's go over and actually check on the S&P 500. We've got our Bitcoin levels here, right? So we sliced through $34,500, right? Which was our previous support level off of this high. And I believe personally a large part of why this happened is because this wasn't leveraged selling. This was panic selling and spot selling from the whole Terra Luna UST debacle, right? So we just sliced through that leverage selling, and then we've bounced off of our third ladder entry, right? Right? Remember, we did not want to be entering and FOMOing it up here. That was resistance. Then we started getting some support in this buy zone, right? We saw support come in. Look at this chop, right? This slowed down the bleed quite a lot, right? Then when we broke through, we sliced through this level. That, in my opinion, is more contributed to Terra Luna having to sell off a lot of Bitcoin and people worried about them selling it off and UST depegging and whatnot. And then we're seeing support in this buy zone, right? We are seeing support in this buy zone. This is a completely reasonable place to bid, just to recap, because I know a lot of people are flowing in. I'm not bidding here super aggressively at all. I am stacking as much as possible for 24K Bitcoin because I believe that if we fall to 24K, we will get a rip back up. We will get a relief, a very large relief bounce, right? The 1X short to 2X short relief bounce. So that would be a bounce from $24,000 all the way up to 32, right? 24 to 32. You can see 32 is already acting a bit as resistance. This short bounce is a very, very common thing for Bitcoin to do, right? Look at what happened here. We had our 1X short level off of our all-time high. We came down to $34,500. We got our 1X short bounce to our 2X short resistance, right? And we actually did it twice, right? If we move to our previous high before the big crash last summer, we got our 1X short bounce to our 2X short, right? And we actually, again, did it twice. So that's the trade we want to look for. That is the money-making trade. And because we're potentially going into a bear market, right? Bears are in control right now. We want to be very aggressive with that. We want to be very aggressive with that and try to get as much money out of the market as possible. Or generate as much money as possible off of that single trade. We want to be pretty aggressive. Take a big bet. And if we're wrong, we're wrong. I do want to switch over to the S&P 500 before we go into total cryptocurrency market cap. Then I'll talk about the 4 things that I want to accomplish during the bear market. You can see this fractal has not played out, right? We were following it so perfectly. This is S&P 500 fractal from 2010, midterms year, right? We usually rally into midterms, and we could turn around, right? We could turn around and rally, right? And this low is just considerably deeper, but right now it does not seem to be playing out. It looks like we've departed from it, right? Before we were following it very, very, very closely, right? To a T, almost, with every high and every low, and now we've come down, and it looked like when we ripped up the other day, it looked like we were going to start pushing up higher, and then we crashed, right? So legacy looking like garbage. We'll just save that fractal just in case we start pumping. But then S&P 500 really falling down, which is not going to help the cause for Bitcoin. Let's go to total cryptocurrency market cap. I want to zoom out here to the weekly. This is a logarithmic scale. Okay. Let me actually clean this up just a little bit so I can clear this out. When has been the best time to buy crypto? Down towards this green dashed level, right? Here and here. And you could argue like right down here, right? We are very close to this level, right? We are very, very close to this level. This is the point, and I just put out a thread on Twitter. Guys, if you don't follow me on Twitter, I have become significantly more active on Twitter. Follow me, twitter.com/0xstacker, 0xstacker. I'm posting daily threads. My Twitter following has grown probably 20 to 30% in the last week or two. Just been putting out a lot of content on Twitter, focusing on it. There's a lot of crypto people on Twitter. So I've just been trying to put out valuable content, helpful content on Twitter as much as possible. So if you don't follow me on Twitter, go follow us at 0xstacker. Okay. This is a very low risk place to buy crypto. And it feels risky. It feels terrible to be buying crypto right now, right? And, if Bitcoin drops to $24,000, that will be an even lower risk place to buy crypto, right? Everyone has risk backwards. I see this all the time, especially I've been seeing it on Twitter. Everybody's got this super confused logic about risk, right? They think buying in a bull market isn't risky. They're like, oh, it's a bull market, it's going up, right? But buying here, and buying here, all significantly more risky than buying down here. Right? Buying down here was in the bear market is the least risky time to buy, right? You have the least downside. You have the least amount of downside when Bitcoin's already down at $3,000 in a bear market. The downside risk is significantly lower than if you bought it at 15,000 plus, right? And I know we're not looking at Bitcoin here. We're looking at total cryptocurrency market cap, but those are kind of the corresponding levels for Bitcoin based off of, the Bitcoin's chart versus this chart, right? So right now we are seeing a trip down to the support level. Now, is this trend line going to hold 100%, right? Not forever, but it has held for the last 10 years. Clifton Matthews, I see your super chat, and I will get to it in just a second, right after we finish analysis on this chart. I appreciate the super chat very much, especially in a bear market. So we've seen this line hold for about 9 years. It's been about 9 years. So are you worried that it's going to break this time around, even though it's held for 9 years? Well, it could break. I mean, it broke during the pandemic very, very briefly, right? If we get a really bad panic crash, we could see it break, right? If we go into a bad recession, we could see it break, and then maybe temporarily, it maybe eventually it does come back after people realize that they need to not be in dollars and not being chipped away by inflation. We could absolutely see this trend line break. However, historically, it's been a really good support level and a really good measure of how risky the market is to buy. Most of the bottoms have been on this trend line or slightly below it. So we're very close to the trend line. In fact, this was a fantastic time. This was a really good time to buy crypto. And this is how I like to measure it, about 175 days away from the trend line, or 154, 147 days away from fair value. Like right now, we are 77 days away from fair value. So you would expect that this bear market's probably not going to go much longer than about 90 days from now. And if you really stop to think about what's happening in the space in the next 90 days, it makes a little bit of sense. What do we have 90 days from now? Well, we have the merge coming up in Q3, Q4 of this year. Hopefully it doesn't get delayed again. But the Ethereum 2.0 merge may be what kicks us off of this level again. Who knows? Maybe we bleed through it a little bit. Maybe we just trickle into it and then move up, right? So I also want to draw your attention to this pattern. This is something that we mapped out a while ago, and this was what I explicitly said I didn't want to see, right? I didn't want to see this. This was this head and shoulders pattern, right? That could easily bring us down to this trend line. But understand that, when you're in a bear market or in a bull market, everyone's saying, I cannot wait for a bear market so I can buy at cheap prices. Well, you're now having the opportunity to buy at cheap prices now and probably in the very near future, right? So we do not get, right, out of the last 9 years, we have a couple of years on this trend line, right? We have a very brief period of time, about 300 days at or below this trend line. And now we have not been on this trend line for the last 581 days. So you don't get these opportunities, right? I don't understand why people have no issues buying crypto up here, but then as soon as crypto drops down to the less risky levels, right? All of a sudden it's like, no, I don't want to buy it. It's too risky. It's too risky, because they're thinking short term. Yes, the trend is downwards, and in the short term, it looks like it's going to drop. And over here in a bull market, in the short term, it looks like it's going to keep going up. But you have to understand, you have to zoom out. You got to zoom out and look at the overall macro trajectory. And this is why I keep a pretty low stablecoin allocation just in general, right? Just in general, whether we're high or low, right? I would say stablecoin allocation right now needs to be lower than it was up here, right? I'm going to be deploying our stablecoins when the risk is lower, but I usually just keep a pretty low stablecoin allocation because I'm young. I'm young. I'm very solvent. Fortunately, to be very solvent, I have business that's doing well. The wife works, insurance, all that kind of stuff. So fortunately, knock on wood, I'm very solvent. I can afford to take a little bit higher risk and just absorb these downturns. Just wait it out. I could wait it out a couple of years for the next bull market, right? So I keep a pretty low stablecoin allocation regardless. I just want exposure to this very fast growing asset class. Okay, Clifton Matthews, can you explain the depeg of UST and how concerned we should be about UST or USDC? Okay, yes, I can try to explain this. This is and you know what, guys? This is required reading. Whoops. This is really, we're going to read through this thread. And I don't care how boring or annoying you find my voice, because this is going to help you understand Terra Luna and the overall market and what just happened at a deeper level. So I know it's a big no-no to just read word for word when you're like presenting or streaming, whatever. But I'm going to do it anyway. An $18 billion stablecoin is losing its dollar peg with all the magical chaos of algorithmic stables with a dash of Bitcoin systemic risk drama. Here's everything you need to know, the UST depeg thread. And you see this has gone viral on Twitter. This is an excellent explanation of the scenario. I do want to go to actually see where it's at right now, so we have a little bit of context. UST versus USDT. So last night, the peg of UST, which is Terra Luna stablecoin, dropped 40% to about 60 cents. It has since recovered to about 89, 90 cents. That means if you have UST, you can only get about 90 cents on the dollar for it. It means some people sold for 40% off because they were very spooked. All right, let's see what's going on here. UST is a dollar peg stablecoin that has depegged twice in the last few days, now hovering around 90 cents to the dollar. Just a reminder of how UST works. You can always redeem Luna for UST dollar for dollar and vice versa. If Luna is at $50, you can redeem it for 50 UST. Similarly, you can redeem 50 UST for 1 Luna. It's worth noting that you can always redeem 1 UST for $1 worth of Luna, even if UST is worth less than $1. It's meant to be a stabilizing mechanism. If UST is trading at 99 cents, arbitrageurs can buy it and redeem it for $1 of Luna, right? So keep that in mind. Right now, UST is depegged, meaning you could sell it for USDT for 90 cents, or you could sell it for whatever the price of Luna is and potentially get your full value in terms of Luna, and then you're going to dump your Luna. So we all know stable coins require utility to maintain demand and defend their peg. So where does UST get utility? Simple. Anchor Protocol. Anchor Protocol is nominally a money market, but the important TLDR is it pays you 19.5% to stake UST. A huge proportion of UST's circulating supply is in Anchor. Right now, it's only 40%, but it's been as high as 70% historically. So why hold UST? Easy, because they're paying you 20% per year to hold it. Two obvious questions. If something is paying you 20% risk-free, why not just borrow a ton of money and make it pay you like 100% plus? That's exactly what Abracadabra Mims Degen Box did. Degen Box and the rest of the Frog Nation DeFi ecosystem unwound in January, depegging UST and sending Luna from $100 down to $46. Sound kind of familiar? Something history may not repeat itself, but it can rhyme. How does one give out 20% in free money every year? Well, that's also easy. The LFG Luna Foundation guard overseers of Terra's multi-billion-dollar ecosystem fund. We'll come back to that. First, we need to figure out what the Luna token does. I'm not going to focus on what drives its fundamental value and focus instead on narrative. Every UST in circulation reduces the circulation of Luna. The win scenario is every single Luna on Earth gets burned for UST. You can see the basic appeal. The more UST, the less Luna. Holders should want to diamond hand Luna. And if there's unstoppable demand for UST and you're the last Luna holder on Earth, you have immense redemption power. It's right on their site. That's kind of why the Luna market cap being less than the UST market cap is FUD. It doesn't matter what the total implied value of Luna is. What matters is the marginal value of each Luna that is redeemed for UST or vice versa, aka Luna's price. So you can see when in a bull market or when there's a lot of money flowing into the Terra Luna ecosystem, it has the propensity to run up a lot, right? Right, because as more money flows into UST, there's less Luna in existence and the value goes up, but it unwinds just as aggressively, right? But what's even more important is the directionality and stability of Luna's price. It's a big problem if the average redemption price of Luna for UST is high relative to Luna's current price. Let me slow that one down. Luna price high, Luna burned. Many UST minted. Luna's price falls, UST redeemed for many Luna. That's bad, right? So that's what I was talking about. It unwinds just as aggressively. If a bunch of UST is redeemed for a ton of Luna, right, when Luna's price falls, that is very bad for the ecosystem, right? Because it causes a lot of Luna to enter the market. It's useful to illustrate using extremes. Say the price of Luna is $1 billion. Then someone could mint 1 billion UST by burning a single Luna. Now, let's say the price of Luna falls to $1 for no reason. That person could redeem their UST for 1 billion Luna. So suddenly, again, for no good reason at all, there's a ton more Luna in circulation being dumped on the open market. This, in essence, is what's happening today. So now back to the Luna Foundation Guard. UST has the same dynamics as many other algo stables, except in addition to the algo part, they also have LFG. In other words, UST is stabilized by contracts, and the gigantic gravity well created the gigantic gravity well created by the size of Do Kwon's nuts. Previously, the LFG was in charge of the Anchor bootstrapping strategy. Take Treasury Luna, sell it, and fill up the Anchor protocol reserve, the big slush fund that pays UST stakers 20%. The bet is that UST is burned for staking, Luna's price goes up, and sell more Luna to the protocol reserve. In longer term, UST takes off as a widely used stable before LFG runs out of money. Luna goes to the moon and everyone is happy. The bet is based on the inverse scenario of it getting unwound beforehand not occurring, right? This was all challenged in January when Degen Box collapsed. That implosion took down a big push for UST to be used in a 10-figure cross-chain ecosystem headed by Daniela Sesta. That's when Jump, 3 Arrows Capital, and others piled into the 1 billion Luna OTC deal to buy Bitcoin. The story there, get the Bitcoin gang on board. Every cycle needs one crazy billionaire to go hard for the king. Give redemptions a UST Bitcoin off-ramp in addition to existing UST Luna. Now there's been a full weekend of gigantic 9-figure moves, market selling UST and pressuring the peg. As with all algo stables, the downside cycle is the opposite of the upside. UST unstaked and dumped, UST depegs due to downward pressure, UST holders redeem for $1 of Luna and they dump Luna. What complicates things is all the Bitcoin in the treasury. Recall when the LFG was buying Bitcoin, remember the 1 billion OTC news. That triggered a massive run-up in Luna, which allowed for tons of high-basis UST minting. Simultaneously, LFG DCA'd into Bitcoin at an average price north of 40K, right? So they bought this Bitcoin at $40,000, and now Bitcoin's price has dropped, meaning they would have been just better off had they not bought Bitcoin at this point. Now, Bitcoin is being driven lower due to macro and ironically expectations that LFG will be forced Bitcoin sellers due to the US peg pressure. So you understand what's happening here, right? Bitcoin's dropping because of the S&P, the legacy, NASDAQ, macro conditions look horrible. But also people are panicking because they're panic selling their Bitcoin because they believe that the LFG, that the Terra Luna, is going to have to dump their Bitcoin at a loss, further driving the price down. So that's contributing to the price action going down. Now Bitcoin I just covered that. So now what's the plan? As of this morning, commit $1.5 billion to defending the UST peg collateralized against Bitcoin reserves. So they're borrowing money they're leveraging up to defend the UST peg. So this is obviously when you start taking out leverage, this gets dicey, right? Because if you get liquidated, it's going to be really, really ugly. Right? The deeper the liquidity, the harder it is for any one actor to dig out and move the price even further away from $1. All right, so we've just got deeper liquidity. It's harder to move the peg. Liquidity, peg defense, market making. That's why Jump Capital and 3AC are involved. They were part of the consortium that bought $1 billion in Luna OTC in February. They're deep-pocketed, sophisticated traders willing to do whatever it takes to prevent a UST death spiral. So what's next? Friendly market makers go to work on deploying a piece of the Bitcoin treasury to market buy UST and keep the peg up. Hope is there's more falling knife Bitcoin collateral in LFG than there is bank run pressure from people fudding UST. Possible outcomes. The treasury gets drained, but UST stabilizes. For now, Bitcoin seems to have stopped dumping on liquidations and liquidation fears. What could also happen is the LFG also seems aware and intent on buying Bitcoin back at a low basis. There's a win-win here. Bitcoin gets pressured to 30K. UST peg restores. LFG buys back into Bitcoin at lower basis. Let's expand the thread here. We're almost done, guys. We'll get back into the technical analysis on altcoins. Sell Bitcoin, restore peg, buy Bitcoin, profit. So this is the best case scenario for Terra Luna. So we could see Terra Luna rip right back up if we see Bitcoin rip right back up. So right now, Terra Luna is kind of, in my opinion, like a leveraged buy on Bitcoin, right? You're getting, if Bitcoin rips back up here and recovers, Terra Luna will probably recover really, really quickly as well. Better yet, Bitcoin somehow moons and we get a Fei protocol situation where despite a difficult situation, the underlying collateral goes up in value and the protocol ends up fully collateralized. And for completeness, since it would never happen, Do Kwon and the LFG ceased their UST defense, annihilating Luna holders and allowing the UST to settle at collateral value. So the TLDR is UST is 100 magic dollars backed by 20 Bitcoins and 80 magic beans, but some people don't think it's worth 100 real dollars. So LFG is selling Bitcoins to buy more magic dollars to convince people they're worth 100 real dollars. Also, the magic bean holders don't get sad, right? So I'll post this in case people are coming in late. I'll post this in the chat. I know that was probably excruciating for some people to just listen to me ramble and just read off of that. But I think it's probably one of the best explanations of the UST Terra Luna situation that I've ever come across. And I think is really, really important to understand it if you're going to be in the market. So, yeah. Let's get into some altcoins. As I mentioned, I do believe that it's possible Bitcoin. So, I mean, right now, people are like, shoot it to me straight. What's going on? Are we going up and down? The answer is I do not know. I am prepared for both situations. Obviously, I have a high exposure to crypto. Let's see here. I have high exposure to crypto, and I've been laddering in. Right, been laddering in at these lower times. We have our buy zone here that is started to see a bounce. We could move back up. If we move back up, I believe the 21-week simple moving average is probably somewhere around. Let's see, we'll just throw it on the easy bands, guys. There we go. 21-week simple moving average is somewhere around $42,000 right now. So somewhere in this range, we could bounce up and recoup $40,000 Bitcoin, or we could continue down, in which case I want to buy aggressively $24,000. I'm 50-50, guys. I'm 50-50. I really, really do not know what we're going to do from here, but I am going to profit regardless of the scenario, right? We're going to make money regardless. Find it highly unlikely that we drop anywhere below $20,000, at least without a mega bounce first. So let's jump into some altcoins. Guys, we do have the easy bands in TradingView now. We have the easy bands indicators in TradingView for lifetime subscribers. So if you're a lifetime subscriber, go over to cryptostackers.pro and go over to this little indicator here, or this little tab, and submit your TradingView username. So like your TradingView username, not your email address, TradingView username. You're only going to have one chance to submit it because once you hit submit, it locks in, and that's the TradingView username that you're stuck with. And yeah, we'll add you manually. It could take up to, it says 24 to 48 hours here. We've got so much demand for these easy band indicators from lifetime subscribers that it could take up to a week. We are going through manually and making sure everybody gets access. So please stay patient if you've submitted your TradingView username for this indicator and you have not received access to it yet. You'll just go to indicators and you'll go to invite only scripts, and you'll have access to it. Let's see. So it's a private indicator. So if you just search for it on TradingView, you won't find it. Aside from that, guys, pricing is going to be increasing for CryptoStackers Pro. The good news is it will not be increasing for the people who have already bought CryptoStackers Pro, right? So if you want to lock in current pricing, I know the idea of increasing pricing in a bear market just feels ruthless, but it's the right business decision for me currently, and it's the right path forward for CryptoStackers Pro. We're growing at a pace right now under a current pricing that it's very difficult to keep up with customer support. It's very difficult to keep up with the growth, right? So what we need to do is we've got to increase pricing, but everybody that's already been locked in and everybody who buys before, I'm going to go ahead and say we're going to increase pricing May 31st. So I just wanted to do it before that, but I'll give everybody a full 3 weeks, the full month of May, to either upgrade to a lifetime subscription at the current rate or lock in $9 a month pricing before we increase pricing. Pricing increases will be going to $49 a month and $14.99 for a lifetime subscription. That is in line with the pricing of Market Cipher. So we are a competitive product with Market Cipher. I believe that Crypto Stackers Pro is a much better product than Market Cipher. So we're going to price accordingly in the market. That may seem like a lot, but I think it is completely worth it. And you still have 3 weeks to lock in lower pricing. Question, if you are on a $9 a month subscription for Crypto Stackers Pro, you're on a $9 a month subscription, will you have to pay $14.99 to upgrade to a lifetime subscription if in the future, right, after May 31st? The answer is yes, but you can upgrade now before May 31st for $299, right? Lifetime subscription is $299. If you upgrade before, you're good to go. Let's see. Otherwise, you can stay on $9 a month for life. You just won't get the lifetime subscription benefits. Let's see here. All right. Let's look at some altcoins. Let's look at Terra Luna. I mean, sitting around $34. It looks like it actually had, let's look at it in, looks like a couple of exchanges had some really erratic pricing, right? On some exchanges, it looks like it bounced all the way up to like 50 something dollars. And then on Binance, it only bounced up to $40, right? So we are sitting below the green easy bands. If UST recovers its peg, and in order to do that, Bitcoin needs to go up in price. If Bitcoin goes up in price and we get a really solid recovery out of Bitcoin here, this is probably a really good buy. However, if Bitcoin goes down to $24,000, we could see further capitulation. And I'd actually consider buying a little bit of Terra Luna as Bitcoin hits 24K, right? As long as it can hold its peg throughout it, which is going to be very difficult, to be quite honest, right? We are starting to see the peg stabilize a little bit, but $32 for Terra Luna, so cheap right now. Sitting below the green easy bands. Let's look at 1 inch is down 18%. Steppen, Monero. Let's look at Monero. All right, Monero. Let's go here. I mean, privacy coins really held up. And look at guys, if you were disciplined about taking profits at the red easy bands, even if you just trimmed 5% from your Monero position if you had one. I don't have a Monero position, but if you just trimmed 5% off your Monero position, you have some stable coins on the side here to buy back at some of these lower prices. Looks like $144 is the level that we want to be considering getting Monero at. All right. Let's see. Yeah, we can look at Phantom. Chaco Ben asking if I have affiliation with Nano. I have zero affiliation with Nano. They have partnerships and relationships with very few people. They don't do influencer marketing, I believe. So no, I do not have any affiliation with Nano. And I do still believe Nano's a potential 1000X. And in that 1000X video, I said, I think we can go down to $1. I think Nano could easily go down to $1. Phantom. We can go look at Nano in just a second. It's brutal. But you have to understand, I'm not looking at Nano as like it's going to, be a short-term 2-week trade. Been in Nano for a long time, and I plan to hold it for a very long time. And I can hold through a bear market. I've been through bear markets in the past, and they do suck. But if you bought Nano in the bear market for 30 cents, you had the opportunity to sell it for $20 this past bull market, right? And that's with it pretty much underperforming this bull market compared to what it should have. Phantom, no, I don't think it's over for Phantom. I got stopped out, so I had this amazing entry point over here off of this wick here. It crashed, got in at 65 cents, could not have timed it better. Ended up coming back down and stopping myself out in profit. Got stopped out in profit, but I still do hold some of the spot Phantom that I bought at 65 cents. I have no issues buying Phantom at 65 cents because it's under the green easy bands, right? And we know that historically under the green easy bands is the best place to buy it. Now, can it drop significantly below the green easy bands? Yes, but usually it recovers. Usually it recovers. And if it doesn't, right, we go into a bear market and it continues to grind down to like 20, 30 cents. That's fine. I'm considerably better off than had I bought Phantom at $3.50. And I can continue to buy down my position under the green easy bands as long as I believe in Phantom long-term, which I do. Guys, if you're buying something and expecting the direction, if you're buying something for the long term and then getting worried about the direction that it's going in the short term, like you probably shouldn't be buying it. You're probably not ready to make that purchase, right? So like if you're buying Phantom here, right? Buying Phantom in the green easy bands at 20 cents, right? And then it drops down to 15 cents and you're freaking out about it and you sell it, right? Why were you buying it in the first place, right? So you really need to structure and ask yourself, are you trading? You need to set a time frame for all your investments, right? When you make a purchase, is it a trade or is it an investment? Most people have no business trading, right? I trade predominantly for fun and for content creation. Fun and content creation. I am a profitable trader. I have a profitable P&L. It has not always been that way. I've learned over the years. I've had months back in 2016, 2017, 2018 where it's just I've been negative on a negative P&L. That's the price of learning trading, right? And I've developed these indicators to make me a better trader, but I cannot imagine or stomach the idea of having to make a living solely off of trading. I think if it came down to it, I have the tools that I could do that, and I have the ability that I could do that. But you got to have some thick skin to trade. And if you're really deeply bothered by these drops in the market, in these drops in the investment, like trading's probably not for you. Not only that, but like when you buy cryptocurrency, it's not like when you bought crypto, it's not like you didn't know what you were signing up for. And I say that because it's literally written on the charts. Right? Let's go to Phantom over here. Right? If you bought crypto and you thought it was only going to be going up, you did not look at a crypto chart. Right? Because look at Phantom over here. Back in February of 2020, down 87%. 87% drop. Then it rallied, right? 78% drop, right? So if you're buying Phantom, regardless of where you're buying it, and you're expecting that there's not going to be a 60+% drop, look at this drop. 70%. Look at this drop. 84%. This drop. 50%. This drop. 66%. This drop. 68%. 68%. Guys, if you bought any cryptocurrency, Phantom in this case, and you thought it was magically never, it had, in the last 3 years, it had 5 or 6 70% corrections. And you just thought it was never going to correct 70% again. It was never going to have another correction or never go down again. That is just an absurd way of thinking. It's really bad logic. Right? So yes, like I am totally okay buying here. I've bought Phantom spot 82%, 81.47% off the all-time high, right? Which has historically been a really good idea to do. Now, could this be could Phantom go to zero? Could this be the time that it doesn't work out? Could this be the time where instead of it dropping 82% or 81.5%, it drops 98% back down to 9 cents? Yeah, that can happen. Let's take a trip down memory lane. Let's take a trip and look at ADA. Let's look at Cardano here. Actually, I think I've got to pull up. I don't know if I got to pull up the TradingView calculated Cardano. Let's take a trip down memory lane here. Cardano had a great bull market, 2017, 2018. 98.75%. It went to zero. It went to 2 cents. 0.017. It went less than 2 cents after being up at $1.33. It went and then it 181x'd in the bear market or in the bull market, 183x'd, right? So you buy crypto and think that it can't drop. I'm sorry, like there's a strong chance it will continue to be volatile. Now, had you been buying the green easy bands in Cardano, and this is like worst case scenario for something that held up probably the worst of just about any crypto that bounced back this market cycle. Cardano held up very terrible. But guess what? If you bought it at $1.35, you got very little Cardano for your money, and you were only up a little bit, right? You basically got a 2x, and you had to wait like 3.5 years for it. But if you started averaging in and buying, right, the green easy bands and having conviction on Cardano long term, then you would have probably been able to get your average price down significantly, and you would have probably had a chance to get out at break even or a profit intermittently on these trips up and trimming on the red easy bands. But you're getting so much more Cardano for your money down here at 15, 16 cents. Again, down here at 3 cents. Yes, if you buy at 15 cents and then it drops to 3 cents, you're down 90%. That sucks. But you have to average down your positions long term, right? And wait for it to bounce back, right? That is Nano. Nano has dropped like 90% from its $20 high this market cycle. It's down near $1, $2 or whatever, like $1.30 here, $1.42. So it's down like over 90%. But if I believe in it long term, it makes sense to continue to accumulate and buy down my position, because when at 180x's, you get that more out of that 180x, right? So yeah, bear markets are brutal. But if you're only coming in, right? If you're coming in the bull market here, right? And then you continue to buy all the way up, right? And then you continue to buy, and then all of a sudden you start selling. Great, you broke even. You didn't make any money, or you made a tiny bit of money, or maybe you even lost money, right? But if you're sticking around in the bear market and you're buying all the way down from 16 cents all the way down to 3 cents, right? Maybe taking a little bit of profits, trimming a little bit here while you have the opportunity to, using those stable coins to buy down your position even further at 3 cents. And you stick to it for 3 years, you end up getting your position down to maybe 5 cents. Maybe you get in at an average price of 5 cents, even though your first buy in the green easy bands was around 20 cents, right? And then, but when it goes from 5 cents to $3, congrats, you made a 60x, right? 60x. 60x is an absurd return, but it just takes some patience. Guys, this is how the whales operate. If you go and analyze, and this is something that I plan to do, the Bitcoin whales, they trim their positions and then they buy when it gets oversold. I think whale number 3, the third largest Bitcoin whale, just bought, right? You see when they buy and when they sell, they just bought. Let's actually get a more clean chart. They just bought down here, right? And they probably have more in the bank ready to pull the trigger if it drops down into this range, right? But they stay very patient. They're not trading every single day. They might take some profits and they might sell, and they might make 5, 6, 7, 10 trades a year. But that's all you really need. That's all you really need. Yeah, we can look at Matic. Let's look at Matic. Matic is like everything else. Let's actually go Polygon. Crashed quite a bit. Fell through some longer term support levels that were holding very, very nicely at around $1.25 for quite a while. All right. So on the easy bands for Polygon. Came down to the green easy band and sprung back up, right? So we crashed, fell through into this accumulation range, had some resistance at $1.16 with this green dashed easy band, fell to the bottom bands, and has since bounced a little bit. A lot of altcoins are down on their green easy bands, right? A lot of altcoins are in a really good position to buy. Bitcoin is on some major support around 30K. Now, keep in mind, if Bitcoin decides to drop to 24K, altcoins are gonna take a beating, right? Gonna take a beating. In what I'm expecting right now is a little bit of relief, right? I'm expecting A little bit of relief, and then we've got a decision, right? Either we're going to break through $34,500 and hopefully make support on top of it and go back up, or we're going to get rejected at $34,000 and probably come back to retest 30K again, and then potentially $24,000 right down here. Right? Those are the scenarios I'm preparing for. I think long-term, this is a completely fine place to accumulate Polygon. Now, I talked about the 4 things earlier, the 4 things I was going to tell you guys. My bull market strategy is number 1. I posted this on Twitter the other day. Let's see. Maybe it was 3 things. Maybe 3 things. Stay solvent, don't go broke. Guys, you cannot put yourself in a bad financial position in a bear market. You just can't. Bear markets, while I personally don't believe this bear market is going to last significantly long, right? Because I think we have the Ethereum proof of stake 2.0 merge coming up, and that's going to lift us hopefully out of this, regardless of what Legacy does. Now, if Legacy just completely craps out, yes, we could drop further, but we're so close to this long-term support level, and it's so attractive to buy right now. I do think at minimum we'll maybe just start kind of trickling up, or maybe just bleed sideways through this before moving back up. But I'm not terribly worried about like a 2-year-long bear market. We're already only I think we're less than 2 years away now, or exactly, we're less than 2 years. We're like 22 months away from March of 2024, which is the next Bitcoin halving. So if we just go off 4-year market cycle, we've got like 18 months left until the next Bitcoin halving. And then we've got a few months left until the merge. So we're actually not that far away, right? Because this was a longer, more drawn out bull market that just kind of keeled over and went sideways towards the end. We're actually already very close to the next 4-year market cycle, right? But we do, even if stuff gets bad, we have to remain solvent. We cannot go broke. If you go broke and you have to sell all of your crypto down here, that is very, very bad, right? If you're broke and you just you lose your job, or something bad happens, you have an unexpected expense, or you go, you're investing too much here, right? You go all in here, and then when crypto drops a little bit more, you have to sell off. That is very, very bad, because then what happens when it bounces? Then you have to buy back at higher prices, and you've just reset yourself. And it could potentially go back down, and then you lose money, right? So you cannot go broke here. Number 1 thing is your own financial security, right? So taking care of your own financial security, whatever that means. For some people, it may mean that they do have to sell crypto at low prices, but that's like our last resort. Number 2, I want to get as much Ethereum pre-merge as possible, right? If we just use the end of the year as probably the latest, December of 2022, it could happen before then. But they said Q3 to Q4, so it could have happened as early as June, probably not. Somewhere in this range, we're going to get the Ethereum proof of stake merge, right? I expect that to do wonders for Ethereum's price and for the overall market. A lot of people, I do not think, understand what is happening with the proof of stake merge. What's happening is that the inflation rate of Ethereum is going to go from positive to negative, right? But not only that, right now, the way that Ethereum is distributed is it's distributed to miners. Miners have overhead and expenses. It costs energy, right? It costs energy and electricity to mine Ethereum. So in order to cover their costs of mining Ethereum, they have to sell Ethereum, right? So there's a constant down pressure, constant sell pressure on the market, right? From that 2%, right? Roughly it's about 2% inflation, right? That sell pressure is going away because those rewards are going to not only be greatly decreased, right? They're going to be greatly decreased, but they're also going to be going to stakers. Stakers don't have any overhead, right? So immediately you're going to see an effect where there's a drastically reduced sell pressure on Ethereum's market, and I expect the price to rapidly appreciate. So I'm operating operating under the mental assumption. This is not a prediction, but when I try to take something seriously, I'm operating under the impression that Ethereum is going to $10,000, right? That it's just going to have a bull market and go to $10,000. Now, I don't know whether or not it's going to go to $10,000 or not, right? Nobody does. But that's what I'm telling myself in my head. And whenever I see Ethereum at these cheap prices, if you operate under the assumption that it's going to go to $10,000, right? Because, the proof of stake merge, it becomes much easier to just DCA and buy in this range, right? Yes, ideally we want to buy in the green easy band levels, but if we operate under the assumption that it's going to $10,000, you're just going to be buying it whenever you can. Just like if you'd have known in advance that Ethereum was going to go to $4,000+, right? All of this noise didn't matter, right? It didn't matter, what was going on down here. You'd have just bought it. If you knew for a fact it was going to $4,000, you'd have just bought it. Now, ideally, we want to be taking as little risk as possible, and we want to be buying between $90 and $124 down in the green easy bands, right? But I'm just assuming that it's going to rip. And if it doesn't go to $10,000 from the merge, we've got the 1-2 punch. We've got March, which it doesn't look like I can go out that far, but like way out in the future, we've got Bitcoin's next halving cycle. As long as we stay solvent, right? As long as we don't have to sell if it drops in the midterm, right? We can hold. We can hold for years, right? And then we expect that it will go to $10,000 at least in the next market cycle when Bitcoin halves again, right? So $2,300, yes, it could drop from $2,300 and grind down these green easy bands down to maybe $900, $1,000, right? That's fine. I'll just continue to buy it and accumulate it pre-merge and through the merge and wait for it to go back up next market cycle, right? You got to start thinking in longer term scenarios. So goal 2, accumulate as much ETH as possible pre-merge. Goal number 3 is accumulate blue chip art once it's down 90% or more. I just put out a video yesterday on blue chip NFTs and blue chip art. I think this is going to be where the money is made. The low risk thing to do is to accumulate blue chip cryptocurrencies like Bitcoin, like Ethereum, like probably Solana, right? But outside of Bitcoin and Ethereum, it starts getting pretty risky pretty quick. The higher risk play, but the play that I think is going to have the highest returns next market cycle or whenever the market picks back up again is severely undervalued blue chip art, right? If we go back to Cardano, right? Cardano was able to bounce back. It's sitting at 66 cents now, but it was able to rip, right? All the way up and do 183 or 181x, whatever this is, right? From top to bottom. From like less than 2 cents all the way up to $3.20, right? You could have gotten it at a 90% discount off of the previous cycle's all-time high. Right now, we've got NFT floor price floor, right? Right now, we've got NFT projects that are going to zero. There's a severe lack of buyers in a lot of these spaces, right? Let's go to Fidenza, blue chip art NFT, peaked at a floor of $947,000, almost breached $1 million. And now it's sitting down here. The price floor is down at like under $200,000. It hit $115,000 earlier. So if we go into a legit bear market, right, and we assume the worst for NFTs and for crypto, or the merge, right, or the merge causes Ethereum to rapidly appreciate and it leaves NFTs in the dust and everybody wants to move their money into Ethereum and out of NFTs, we get an NFT bear market while we have an Ethereum bull market, right? We may have an opportunity to buy blue chip NFTs at a 90+% discount, right? Buying a Fidenza at $122,000 is probably a smart decision. I'd be looking to get in if we drop below like $50,000 or $60,000. Right? And I know not everybody can afford a Fidenza, but there's other blue chip NFTs that are more affordable. Chromie Squiggles, right? Rank number 16, Right? Currently, the floor is $14,000. If this were to drop down to like $2,000 to $3,000, for a lot of people, $2,000 to $3,000, obviously a big NFT purchase, but it's, you could probably swing it, right? And we've seen these peak over $50,000 in their bull markets, right? Floor price. So currently it's down like 70%? Down 70%. This bleeds down to like $3,000. Pick it up 95, 96, 97% off. This generative art, this first wave of generative art that has set the tone for the entire space, it's going to be worth a lot, in my opinion. Even Bored Apes. Like people think, oh, you want to have your money in a Bored Ape because, it's not going to, it's going to hold up. It's a blue chip. Guys, we just shed from $429,000 2 weeks ago, less than 2 weeks ago, to $208,000. They dropped 50% in 2 weeks. So you cannot tell me that Bored Apes are immune to dropping 90% plus in a bear market. They just will. They like there's not going to be any buyers wanting to buy NFTs, right? In a real true NFT bear market. So, yeah, that's where I think will be the equivalent to buying altcoins, very cheap altcoins in last bear market. All right. Yeah, we can look at eGold and VeChain real quick. Let's look at VeChain. Throw on the easy bands. Yep. Accumulation time. If you believe in VeChain long term, accumulation time. Very frequently we get these mean reversions, right? We drop into the green easy bands, we get a mean reversion. Drop into the green easy bands, mean reversion, right? Last time buying in the green easy bands or on the green easy band would have given you 4.5 cents to 8.5 cents, right? If we get another mean reversion, we're looking at the mean right now is around 6.2 cents. And we're currently sitting around 4 cents. If we were to drop as low as 3 cents, you could potentially get that 2x just off of a mean reversion. eGold, which is Elrond in cryptostackers.pro. Boom. Throw on the green easies. And yeah, we're in the zone. This is a completely fine time to be accumulating Elrond. If you believe in it long term and you're willing to hold it for 2, 3, 4 years to let it bounce back. And if you're willing to continue to buy down your position. Now you may not have to buy down your position, right? A lot of times we get to move into these green easy bands and then we rip right back up to the red easy bands. That would be great. That's what we want to happen, right? We want to be able to take profits within a few months of building a position or taking a position, right? But we know it's crypto. We may have to wait 2 years. We may have to wait 6 months. We may have to wait 12 months, right? It's great. It's great when we only have to wait 2 or 3 months and we get to take profits. But it's, occasionally if it's a longer term bear market, we may have to buy our position downs and wait a year and a half, which is what it is. That's the name of the game. The best, the richest people in crypto are the most patient. Solana got our bounce off of $65 that we thought I would have posted this on Twitter. Let's see here. And if we go all the way to the bottom here, I believe that's where we get $65 as our sunset level. Yeah, 65.42. There we go. 65.61. So we did fall through this line a little bit, but overall it held, and we're starting to get that bounce. I think we'll consolidate here. If we do take a trip up to $87, that could be a decent time to take some profits off the table for anybody who got into Solana around $65. All right, guys. I appreciate everybody joining this live stream. Guys, if you are still paying attention to crypto when it's crashing like this, if you are still grinding, you're still managing your portfolio and making, level-headed decisions, you're probably going to make it in this space, right? A lot of retail people have left the space completely, and they've just either decided they're going to hold through a bear market, or they've probably exited and sold at really cheap prices, right? And they're kind of in despair right now, and they're not paying attention to the trends that are going on in the space, and they're just not going to be maximizing their ability to profit in this space. If you're sticking around and you're learning in the space and you're paying attention to what's happening in the market and you make level-headed sound decisions, you're going to be good. You're going to be okay, right? You're going to do well. Just cannot let yourself fall into the trap of FOMOing in the bull market and then just going away completely in the bear market and not paying attention, right? It's easy to do that because it's frustrating to watch prices fall, but that's when we need to be the most involved. This is when the most money and the biggest opportunities are available in the crypto space. Guys, if you enjoyed this content, please do like, comment, and subscribe. And if you want to check out Cryptostackers Pro, highly recommend checking it out and signing up before the end of May. Like I said, May 31st, pricing is going to be increasing significantly. It's going to be moving to a more competitive price of $49 a month and $1,500 or $1,499 for a lifetime subscription. However, you sign up before then, it is considerably cheaper. It's $9 a month or $299 for a lifetime subscription. I know it's tough and it is a bear market. The good news is Cryptostackers Pro is still growing at a very fast pace. It's still growing at a very fast pace despite the bear market, which tells me two things. The people that are using it are very involved and they're not going away in a bear market, right? And that it's working, is helping people, right? If it wasn't helping people, people wouldn't be signing up and they wouldn't be using it every single day. We're well over 3,000 daily users now, which is really great. Also, we have a fantastic Discord. Big shout out to King T and Korakan, the admins in the Crypto Stackers Discord. They've got it spinning like a top. A lot of people in the trading channel posting the trades that they're taking, talking about it, right? Sharing alpha, sharing their thoughts on the markets, sharing charts, right? It's a really, really good community, right? And part of the reason we need to increase the price is to slow down the growth a little bit, right? We want to keep that community as positive and high quality as possible. So guys, thank you for tuning in and we will catch you next time. I'll get a little outro music for you guys. Peace.
SWB audio capture, not registered.